Good morning. You're watching Business World Live. I'm Danny Laurel. It's the start of a new trading week. Let's kick off with our banner story. The Finance Department expects reimposed lockdown measures to impact the economy in the third quarter. Now, recall that the economy expanded by 11.8% in the second quarter, but economists say this was mainly due to low base effects as the GDP grew from a 17% slump in the same period of last year. Now, renewed mobility curbs in the second quarter also led to a 1.3% quarter on quarter contraction. In an economic bulletin, the Department of Finance said more supply of vaccines and a faster nationwide COVID-19 inoculation program will help mitigate the impact of the pandemic. The DOF also urged legislators to consider amendments to some economic laws to allow more foreign investor participation in the Philippines. The agency also said that the passage of the CREATE law and the continued infrastructure drive will help the country's economic competitiveness. Meanwhile, London-based think tank Oxford Economics has again trimmed its growth forecast for the Philippines. This time, it now expects a full-year GDP growth of 4.5%, down from its 4.8% projection last month. Its original forecast stood at 8%. Oxford Economics said the spread of the Delta variant is weighing on the near-term outlook for many emerging countries, including the Philippines. Now, the Philippines has recorded its first Lambda case, or the variant first seen in Peru. But the Octa Research Group says the Delta variant remains the more pressing concern for the country's COVID response. Officials have logged 182 new Delta infections as the Philippines averaged 11,000 new COVID infections per day from August 8 to 14. Active cases likewise climbed beyond 100,000 as of August 14th, not counting the possible yield from 3 laboratories that were not able to submit testing results. Yesterday, the health department logged close to 15,000 new COVID cases, marking the second highest daily tally since the pandemic began. Guys, Asian stocks are set for a steady start this Monday morning. Investors are awaiting a slew of Chinese data, economic data, to gauge how the Delta virus is impacting the recovery from the pandemic there. You've also got equities in the US and Europe pushing onto all-time highs last week. But then again, this fast-spreading Delta variant remains very much risky. It's weighing much more heavily on Asia. You can see on my terminal here that Asia is largely in the red throughout this trading day. You've also got even more, near record cases, not just here in the Philippines, but in Thailand and Vietnam, as well as lockdowns all across the board. A sea of red spreading here. And what is it looking like for our own index? Actually going against the grain for the first time in a while. We are up by 1.5%, trading at 6413.77. Of course, this is still far away off from the 6700 levels we had seen and just a few weeks ago. Of course, this comes as we did report those second highest infections ever recorded, the highest that we've seen in more than a year. Another thing that investors are, of course, watching is the extension of the 2-week lockdown. Is that going to be happening? This, according to Manny Cruz at Papa Securities, he was expecting a downward movement last week, but not this drastic. But he did mention that, apart from this, there is that prospect of the lockdown continuing to run longer. Let's take a look at the sectors here and which ones are bringing our bourse some confidence. Holding firms up by 2 8/10%, services and properties as well. So all across the board, save for the ones that are not part of sub indices, are actually in the green this morning. Let's take a look at whether the ones moving are really the ones that were sold off last Friday. You can see FGen up by a hefty 7.5%. Today, they've also just released their earnings. You've also got ICTSI following suit. So quite some big jumps here. Alliance Global as well. This was heavily sold off last Friday. SM Investments as well, one of the worst performers there. On the downside, you've got AC Energy, which has just been added to the big boys here as the worst performer this morning, down by 4 2/10% here. Now, here to share his insight, we have with us Ron Acoba of Trading Edge. Good morning, Ron, and welcome to Business World Live.
Good morning, Dan. Thank you for having me in your show.
Ron, such a shocking movements here at big numbers in terms of jumps. You did mention already last Friday, that while everyone was panicking with this huge sell-off, the biggest we've seen in more than a year, you did mention that, don't panic too much. A lot of that is really because of the index rebalancing and taking out
Yeah.
of a lot of several players. Now, what are you seeing? Are you seeing a clear reversal of the sell-off in terms of the players? And how is the new sentiment in terms of the lambda, the increasing cases over the weekend going to weigh on the index this week?
Well, what we're seeing right now in in the morning trading is exactly what we expected following Friday's 3.6% decline. As I've mentioned, and as you've noted earlier, that much of last Friday's decline was because of the index rebalancing. Actually, a lot of the public, a majority of the public, and even fund managers at that, were mainly focused on the names that were going to be included, namely Converge ICT and AC Energy, and the names that were going to be removed, which is Emperador and BMC. Not a lot of them, however, knew that other index heavyweights like SM, SMC, JGS, AEV, and the like, that their weights were going to be reduced. Even in my case, I was a bit caught off guard. Actually,
Of course.
it was my colleague who noted that the
Mm-mm.
likes of SM, their weights were going to be reduced or tapered by point 0.2. Point 0.2, if you take a look, if think about it, isn't too much. But at that time, we didn't actually think of the implication of a 0.2% decline in weight. But come to think of it, with passive index funds amounting to 150 billion pesos, a 0.2% decline in the weight already translates to an outflow of 200 plus million pesos, and
Okay.
that's what we saw across the names that were sold down last Friday, uh, and because of that, and because of it being a one-off event, you're seeing them rally sharply. The likes of ICT, SM Investments, SM Corporation, as you can see, because of trading normalizes once again.
Ron, what about those two big boys? So you've got AC Energy and Converge. Even before the addition to the index,
Yeah,
they've already been some of the best
yeah.
performers despite the pandemic. Is there still room to run here, or was that a knee jerk reaction to this announcement that has now been already
Well,
priced in? It does seem that they're in the losing end at least this morning.
well, a lot of its recent uptake, at least for the past 2 weeks, were mostly because of the market's anticipation that they will be included in the index. So you've said that already. Their uptick last Friday was actually based on a knee-jerk reaction because of the rebalancing. Now, in the near term, I see them at least pulling back. Well, they're pulling back now and then consolidating for like several weeks or even a couple of months. Why? Because while they're generally trending up, they're actually quite a bit pricey pricey already. For example, AC Energy is trading somewhere between 38 to 40 times, while their growth expectations is actually robust, double digits of around 15% in the next 4 years. The earnings has to catch up a little bit more to its price. For it to catch up, the stock needs to take a pause. Both AC Energy and Converge to take a pause and consolidate. But in the long term, the next 2 to 3 years, those names remain to be the horses. I might say that I continue to like.
Okay. So you do still see them having room to run, but they have to prove that in terms of earnings. But then, Ron, this rebalancing aside, what is going on with the index, and what were the trends that you've been seeing here? I do have a chart here from Bloomberg saying that we are set for a seventh death cross in 8 years. Your thoughts on this?
Well, actually, the main one of the main reasons or the main theme that's driving the market recently is the Delta variant, and maybe in the next couple of days, the news of the new lambda variant coming into the Philippines. That's actually the main theme that actually drove the index down from a high of 7,000, almost 7,100 in the past month. That's actually a 5 month high already to a low of
Okay.
6,200. Actually, without the Delta variant being a theme, we could be entering a bull phase already. But
Mm-mm.
that prospect was totally erased because of this new threat. Now you mentioned a death cross between a 50-day and 200-day moving average seen in the index. If the 50-day sustains its decline below the 200-day moving average, then that actually suggests momentum to continue to go down. Now the key support that I'm looking at is the recent low of 6,164. So
Okay.
that's really key, because if we fall below that, which is essentially the 2021 low, because if we fall below that, we're coming off to its next base of around 5,000, 5,700, the level or the area where the index consolidated back in August of last year.
Okay, what are the signals telling you in this chart, Ron? Like where you did mention if that does happen, then we're going to be
Yeah.
seeing a floor here. But what is the momentum right now? I mean, the RSI, it's in between. It's not
Well,
necessarily overbought, oversold. What direction is it going to be going?
generally, you're asking for direction. The answer is
Mm,
there's lack of direction in
direction.
the market.
Okay.
Lack of direction in the market, meaning no market is in a neutral stage. When talking about the next couple of months in the midterm, not really looking at the RSI, or not really looking at the MACD. If you look at the low bases,
Mm,
while the index has managed to establish a series of low bases since it fell to a low back in to it one of its lowest level in March of last year. On the other end, it has likewise established a series of lower highs, which tells us that neither the bulls nor the bears are completely in control. So we are in the
okay.
middle of this tug of war between the buyers and the sellers. It's sort of saying that we are generally in a wild, volatile, sideways market, which
Okay,
we are
medyo
seeing.
mahirap. Ron, what about the sectors in terms of the earnings that we saw in the second quarter? Could you actually see some standouts when it comes to sectors, better than expected performance, worse than expected performance, at least based on the earnings? And do you have any, favorites, if you can say that,
Well,
in terms of the coming months?
generally speaking, earnings for the for the for the broad companies are came in with robust growth, at least on a nominal basis, precisely because we are coming off a low base. Same thing that we saw in the output of the economy as a whole. We're seeing the same on a micro company level. However, the standouts for me are the likes of Century Pacific, the likes of DNL, precisely
Okay.
because despite of last year's pandemic, which affected the earning capacity of almost all of the companies, they still managed to perform really well last year because they are in happen to be in the business of essential consumer good business. And not only that, they are expected to continue to grow by double digit this year. So the main difference is that a lot of the companies that are posting robust growth are coming off a low base. These companies like DNL, CNP, aren't coming from a low base. They're coming from a growth last year, and they are looking to sustain that into the present year and perhaps even to the next. So those are the ones that are standing out to me.
Ron, what about the banks? We had a slew of bank earnings. We have the latest one here, RCBC, which has net income first half higher by 7%. Of course, you already mentioned the low base year, but you've also got the loan growth 9%. And then it's been very mixed. Some have, as you mentioned, off cam already, offloaded the provisions very early or early
Mm.
on for the loans. will this be a better year for the banks, at least compared to last year?
Well,
And do you see the stock prices at least rebounding?
well, for once, our RCBC's 7% increase in net income because of it managed to grow its loan portfolio by 9% is actually a surprise, a welcome surprise to
Okay.
me at that, because the bigger banks like BDO and Metrobank, yeah, they managed to handsomely increase their bottom line, but much of it was only because of a notable decrease in loan provisions relative to
Mhm.
last year to this year, an improvement in fee-based operations, and more notably a decline in income tax provision. So the only positive thing there is they managed to increase their fee-based operations because branches have already resumed operations relative to in the past. Now, whether with regards to your question that if they are able to sustain their earnings for this year, um,
Mm-mm.
maybe it all depends on business activity continuing, and business activity sustainably continuing or sustainably operating hinge on the fact that we are able to control the spread of the virus. And one of the ways to do that is to swallow the bitter pill and close the economy, at least for a period of time. We're doing that already, but unfortunately recent data is telling us that
Wala
despite
pa
the
rin.
lockdown
Yeah.
still continue to go up even at an all-time high at that. So which
Yeah.
is actually
Yeah.
quite worrying. And this is
Mhm.
the factor that will affect not just the banks, but a lot of other businesses.
Okay, so as you mentioned, no clear direction at this point in time. We are in the thick of things. Despite the lockdowns, we don't really see a decline in cases, and that's what's keeping markets edgy. But you do have some bets here. DNL, Century Pacific, you did mention those are the ones that might be seeing continued, at least, consumption throughout this difficult time. Thank you so much for your insights, Rana Koba, Trading Edge.
Thank you, Dan.
Checking in on the biggest headlines we're keeping our eyes on, the national government's debt service bill has risen to almost 774 billion pesos in the first half of the year. Now, in June alone, debt payments increased by over 146% from the 61 billion pesos recorded in the same month of last year. Principal payments went up by 57% in the first half, 405 billion pesos of which were paid to local creditors, while 160 billion went to settle foreign debt. Meanwhile, interest payments also grew by about 11% in this 6-month period. The government aims to pay almost 1.8 trillion pesos of its existing debt by the end of the year and borrow another 3 trillion pesos to support its 4.5 trillion peso spending plan. So far, it has raised 1.93 trillion pesos in the first half of 2021. The completion of an 8.8 billion peso project that aims to build elevated walkways along EDSA will be pushed back to nearly or by nearly 2 years, that is until 2024. This as the MMDA now only allows utility relocation work at night versus the original plan of 24/7 construction. The EDSA Greenways involves the construction of a 5-kilometer covered walkway that will be connected to 4 mass transit stations. That includes the LRT Line 1 Balintawak Station, the MRT 3 Cubao and Guadalupe stations, and the TAF station shared by MRT 3 and LRT 1. And that's a first look into the business day. Today is Monday, August 16, 2021. Catch Business World Live for the market close. That's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.